go.
All right.
Yeah.
Yeah.
Um.
Sorry
So
about that.
no, no problem, no problem. So, well, Brian, thank you for your time. I really appreciate it. I think it's your first time, right, doing this on Instagram.
Yeah, I'm not do I don't do I've never done a live Instagram, so sorry for the technical problems.
Nah, no problem. I think Jay tried to connect with you, Jay Woods.
He did, yeah. He was texting me, but it honestly didn't help. I stumbled into it. We're here. We're good.
Well,
How are you, Juan?
well, we're good. Okay, let's move on with this. So, well, Jay, Brian, thank you for your time again. It's a privilege for me and all the Latin American community to connect with you and understand more about what you think and how you make your decisions based on your analysis. And that's what we want to cover in the next few minutes, okay? So let's start
Okay.
with tell us more about your background. I know it's a long one, but I try to summarize in a few sentences.
Okay. I graduated college in 1991, and right out of college, I knew I wanted to be involved in finance. So the easiest path for me as a pretty average student was as a retail stockbroker. And so I went to work for Lehman Brothers in Boston in 1991 and realized pretty quickly that it really wasn't what I wanted to do, that is, to be a salesman. But I did stick with it for a couple of years till I moved to Denver in 1993. Yeah, 1993. And then I started with a firm out of New York called Generic Trading, who used to run ads in the back of Investors Business Daily for leveraged accounts. And that's basically all it, what they called it a prop account. It was basically a leveraged account where they gave me 20-to-1 leverage on my money. And, started doing that made money consistently every month that I did it, but it was off of a small base, and I was just starting a family and that sort of thing. So I had then had the opportunity. I created the opportunity, in fact, to open an office for that company called Generic Trading, to open an office for them in Denver. So I did that, and then created some educational materials around that, educated myself, constantly looking at charts and, read back in the day, used to read Barron's and Value Line and
Mm-hmm.
all those,
Mm-hmm.
things that, so, my passion has always been the markets and trading and, not so much running a business as much. I guess I can fast forward a little bit to 2008 when I wrote my book, Technical Analysis in Multiple Timeframes. And that was about 2 years after I started alphatrends.net. So that kind of started, Alpha Trends kind of started as a continuation of what I was doing for a company called MarketWise. And at MarketWise, I was the director of education. I ran their proprietary trading department, a number of different roles over the years. And then when that company disbanded, I was enjoying market every day. So I just continued to do that on a blog. And I guess that it got the attention of Howard Lindzen over at, what's now StockTwits. That StockTwits wasn't invented yet. But he had, asked me to do some work with him on technical analysis for his company called Wall Strip. And anyways, it started out, he said, listen, you've got a good following. Would you like to, create a subscription product? We'll do all the work behind it. So I did that. And, he's the one who got me on Twitter and StockTwits. And,
Mm-hmm.
at first I didn't really understand social media, but obviously I've taken to it, except for Instagram.
Yeah.
um, so here we
So
are today, and yeah.
so I want to ask you this because I think it's important. When I read your book, one of the phrases that I'm going to ask you this because you asked someone else, but I'm going to ask you this time for you. What is your passion? What do you feel passionate right now after all these years in this big journey?
Okay, the market still fires my passion. I mean, there have been times where it hasn't been as strong over the years, where it's kind of faded. But I think that really it's kind of rekindled just because of market volatility, more interest from social media, and I get more feedback on what I'm doing. And that's important because, as a trader, I've kind of over the last 10, 12 years, I've always worked from home. And a lot of people are now realizing that that's a way that you can work, but there can be, periods where it can be lonely. So having all the feedback really kind of fires me, and getting questions from people about the type of work I'm doing, and in particular the work I'm doing with the anchored volume price. That really, to see other people's path ignited by the work I'm doing further fuels me to do what I do and more often. So that's really kind of, feeding off the energy of others, really.
Okay, so right now, so you fields are more identified with day traders, swing traders, or long-term investors?
My focus is on swing trading. I will
Okay.
do day trade when the market is just volatile to handle swing trades. When the market
Mm-hmm.
tells me, you can't do swing trades. But I prefer swing trades, and really, even though I guess over the last couple of years that's kind of expanded out. It used to be, let's say, 2 to 8 days. Now it's more, 3 to 20, 22 days, somewhere in that time frame. Just because I don't have I think the mental concentration is still there, but I just don't have the interest in sitting there and day trading the way I used to. Sometimes I get the bug, and I do, and I'll sit
Yeah,
there
yeah.
and I'll just,
It's tempting. It's
I'll
tempting, right?
yeah, and sometimes I'll just feel it, like I'm in the zone, that I don't even realize that I'm day trading. Almost, I'm just seeing opportunities and taking advantage of them, and then I realize later, wow, that turned out to be a great day. I wasn't trying to day trade, but it just happened that I was tuned in somehow to the market that particular day, and that the opportunities seemed to just present themselves to me. And I think that that's the way the market is sometimes. If you have to be there for the opportunities, and you have to have an open mind rather than just saying, okay, I'm looking for longs or I'm looking for shorts. It's easy to get wrapped up in me telling the market what I want to do. And that's one of the most common questions people ask me is, what's a good scanner to use? How do you scan for stocks? And I personally, I don't use a scanner. I don't find anything wrong with, having a scanner, but I've been doing this long enough that I can, each and every day I'll go through, my list of the stocks I look at each day is right now about 250 every single day. I look at those on 5 different time frames, and I can go through those in 30 minutes and find the ones that narrow it down to what's going to be my focus list for the next day. And it's not necessarily that I'm going to trade the focus list the next day, but as stocks I want to start kind of familiarizing myself with, see how they're acting, as they approach a key level of prior support, which might become be resistance here, or just try to get a feel for the personality of the stock, and listen to the message of the market. And that's kind of circling back to what I was saying with scanners. In that, with a scanner, you're saying, here's what I want the market to give me, versus I'm going to listen to the message of the market. I'm not going in saying I'm looking for longs, I'm looking for shorts, because often I'll do that. You look at the market, it's down 3 days in a row. Then you're like, oh, well, maybe I should be looking for shorts, when you should
Mm-hmm.
probably be looking for longs. But if you go in just with an open mind, you'll see, hey, wait a minute, these stocks have all come down. Maybe they're close to a 50-day moving average, so you don't want to get into that. And they've dropped 6-7%. You don't want to be the guy shorting in the hole like that. So listening to the message of the market is really kind of, what gets me excited. It's like a little treasure hunt every day.
So are you consider yourself like a trend followers, or you have any other method that you like to chase?
Yeah, I mean, I'm terrible at picking tops and bottoms, and I think most people are, and
Mm-hmm.
short-term
Yeah.
turning points. It doesn't mean I don't try it once in a while, but I've gotten a lot smarter at that. That when I would try to pick a bottom or short a top, I would be very stubborn. It was one of the things I had to work hard to really break myself of. So I would start to buy, 1,000 shares, buy another 1,000, another 1,000, another 1,000, another 1,000. Now, it feels stupid, but now I'll look at the same type of stock and I'll go and I'll say, I'll try it here with 200 shares. And then if I really start to see some evidence that it's going to turn, then I can lean into it a little bit more. That's not my preferred, approach though. I'm a trend trader. So what I'm looking for is an established up. So let's just talk long for a moment.
Mm-hmm.
I'll look for an established uptrend on a longer term chart. So I don't really want to see, prior consolidation on the weekly chart that might become resistance. I look
Okay.
for a daily chart that's in a stage 2 uptrend. And I'm not buying pullbacks. I never want to buy a pullback because I don't know if it's going to just be the pullback that keeps pulling back and pulling back and pulling back and failing.
Mm-hmm. Mm-hmm. Yeah.
So,
So you don't believe in buy the dips?
no, I don't believe in buy the dips. I think that buy the dips is and you kind of hit a little nerve there. I don't know if you saw a tweet recently.
Yeah. So.
But I think the whole, there's nothing wrong with buying after market weakness and it begins to turn. But this whole mentality of buy the dip, if you look at what happened in February of this year, there was no
Mm-hmm.
opportunity to get out of that buy the dip. Like a lot of people got slaughtered trying to buy the dip because it kept pulling back, and then the dip turned into, a crater. So what I like to look for is wait for the actual evidence. So I don't want to buy, let's say, as a stock comes to its 50-day moving average. I want to look at it and say, okay, it's at its 50-day moving average. Now I'm going to drill down to, let's say, a 30-minute time frame. So when I say 30-minute time frame, I mean, just for your audience, I'm sure you know this, is
Yeah.
I'm looking at 30-minute time increments for the last maybe 3 weeks or so. So it's 30-minute candles, which there are 13 of each day, 13 30-minute candles, and trying to establish where the potential support and resistance are and try to establish a plan of action so that if the buyers do gain control, I know where my risk is rather than just saying, hey, I'm going to buy the dip, and if it goes down 5% or 7%, I'm going to sell. To me, that's it's better than not having a stop at all, but having a random percentage number doesn't make really any sense. I want to base my stops on actual levels on the chart. So to go back to what I'm describing here is we have a stock in a nice uptrend. It pulls back, and then it starts to turn sideways for maybe a day, 2 days. And on these shorter term timeframes, you can start to see short term support and resistance form. And as it breaks back above that short term consolidation, it makes a higher high on that shorter term time frame. Now we have the trends aligned. So that's where I want to get involved and then set my stop underneath what I call the most recent relevant higher low. So the definition of trends is higher highs and higher lows. If I'm buying a
Mm-hmm.
short-term higher high, what would invalidate that? Well, if it makes a short-term lower low, and that's based on the time frame that I'm looking at. So that time frame, will be a 30-minute or 15-minute time frame. And then, so I'm not waiting. So let's say the stock pulls back from 50 to 45 is the low, turn sideways. I buy it at 46.5. My stop might be 45.80, let's say. And if I'm buying it at 46.5, when the prior high was 50, you're going to see the stock goes back up to 50, and then all these people start getting excited and saying, hey, it's breaking out. I'd love to sell some to the breakout crowd. It just feels good because there's so many times that those breakouts don't follow through. And people wonder, well, why do the breakouts, why aren't these breakouts working? And it's often because they fail to ask, where has the stock just come from? Has it expended a lot of energy to get back to that point? And it's going to tempt some people to take a little bit of profit. So I always like to sell a little bit into that type of move. And honestly, it probably feels good to think that I'm being smarter than the breakout crowd, but it's also, it's something that
Do
I,
you do you
when I do
do you
sell.
also use volume for confirmations?
I don't. I do not use volume. I use volume only in regards to the volume weighted average price. So
Mm,
volume, so excuse me, so the stock rallies up on big volume, it pulls back on lighter volume relative to the advance. And then what you see is, the volume tends to peak at turning points. So as that stock rallied from, let's say, 43 to 50 the first time, the biggest volume is generally on that day where it traded at 50. And then it starts to pull back, and it does so on diminished volume. I think that, early in my career, I used to wait for volume, and then I would wait and wait and wait, and I'd see the stock moving without me, and I'd be like, but the volume's not there. Well, as you know, I always like to say only price pays, because
yes.
it's true. I mean, you can look at the MACD, you can look at the V, well, you can look at anything. At the end of the day, the market tells us whether we're right or wrong based on how did it do relative to the price I paid. That's my benchmark. That's my anchor point, is what I paid for the stock. So I want to know, you know, what I look for in volume, is that I at least a 500,000 shares a day. That's my absolute minimum. A 20-day moving average of volume of at least a 500,000 shares. And then after that, I'll look at it, and I don't want to wait for the volume confirmation, because by the time the volume confirmation comes, it's typically when it breaks out at 50, breaks out and eclipses that prior high at 50, and the breakout crowd comes in, the volume swells, and then you have big volume without further upside, which equals distribution. And that's often at times where you have a very short term, at least, turning point, and it might pull back down to 48, 48.70, and then turns back up. And I might add back at 48.95 on the way back up, part of what I sold on the push past 50. So
Okay.
I'm managing the position within the swing trade as well, but I'm not trying to day trade it. So I'm trading
Yeah.
around a core position. Sometimes it might involve some day trading, but that's not the objective.
So in your case, you use sell limit and buy limit orders, or what's your typical orders that you use?
I'm generally there in front of the computer, most of the day. At least at the times when I think it's time that I, need to, make a decision to buy or sell. Let's say the first 2.5, 3 hours of the day. So what I will typically do is, if I see that stock and I think it needs to break beyond 46.50 for it to make that higher high on the short term, I'll set an alert at maybe $46.40. And then my alert will go off at $46.40. And that reminds me, hey, take a much closer look now. You're getting close to thought was the price that would break out. Maybe it runs to 46.40 and then it pulls back a little bit. I'll reset my alert to 46.45. And if it triggers right away, I'll say, wait, here it is again. And then I'll watch it and watch it and watch it and try to anticipate that move. And if I start to see at that point that maybe it's getting a little bit busier in terms of the rate of transactions. So if I'm looking at the number of buys and sells, if it's starting to pick up a little bit, then I'll start to get more interested. And then as it gets to my level, if I have a strong market backdrop, the rest of the market is good. We've got a good advanced decline line for the day. then I might even, you know, if it's 46.48, I might just put in a order to buy it at 46.55. So my order, my price is 46.50, but I might put in
Mm-hmm.
an order at 46.55. That's my limit, in other words, because if it runs through that 46.50 and I only get filled on, let's say, 300 shares, and I'm trying to buy 2,000 shares, well, I'll chase it, but only up a little bit. I'll chase it up to 46.55. And that does two things. One, it doesn't limit me to just 46.50. Secondly, it doesn't, you know, put me at the mercy of the market with a market order, because I might get
Mm-hmm.
filled at 46.80 and I don't want to buy it 30 cents higher in 2 minutes. That's just dumb buying, I think. So I'll
Okay.
put a cap on it, and hopefully my order will help eat through that supply and trigger other traders to look at it and say, hey, something's going on there. So if it goes up to 46.55, let's say I put in an order for 2,000 shares, I'll get filled on 1,700 shares, let's say. Then I'll have a bid there at 46.55 for 300 shares. Then someone might try to jump in front of my bid. And that's, you know, that's a good sign that I like to see. Someone's trying to get in front of my bid. And then I'll, you know, maybe I'll sell, you know, I'll sneak 200 shares out up 25 cents higher just to, you know, reduce my risk just a little bit at the start to lower my cost basis, make sure that if it moves against me, I don't get trapped and that sort of thing.
Okay. That's a wonderful, very technical answer. So I have a question for you. I know this is really important because, as you know, I'm a CMT candidate right now, and it's a big topic for CMT. So
Yep.
what I want your opinion about how important is risk management for you?
It's job number one, always. Risk management truly is job number one. I wrote that, you know, that used to be one of the things I used to say every day. It is absolutely the most important thing. No successful market strategy, I don't think, has ever been invented without risk management at the cornerstone. And that's what technical analysis allows us to do, is to define our
Hmm.
risk based on, you know, trend, or what, you know, and trend for your time frame. It doesn't have to be the time frame that I'm involved in. When's enough? When do I realize the market doesn't agree with me? It might be a value stock, but it might continue to be a value stock for the next 5 years, 10 years, 15 years. We have to have some price movement as well. And, you know, risk management, that's what technical analysis, that's why it's such a big part of the CMT program, is because,
Hmm.
you know, risk management is the cornerstone of any successful approach in the market, regardless of time frame. I mean, even, you know, and just to go to that point for a moment, you know, if you look at what Warren Buffett did with the airlines, he caught a lot of flack for selling them, you know, 4 months ago or whatever it was. But even Warren was willing to take a loss and say, enough's enough. This game, the theme for which I was involved changed. I need to get out. I'm not going to ride this thing out forever. There's too much uncertainty. I'm going to take a loss. And people laughed at him like, that's the stupidest thing ever. That's the, you know, one of the best things he could have done, is say, my thesis for being in here no longer exists. Why do I want to be long? So going back to, if I can circle back around to my strategy, is that I like to look at it and I buy that higher high, and I want it, and I set my stop under the most recent relevant higher low. Because if it makes a higher high, it pulls back down and makes a lower low, and I'm a trend trader, well, what
Hmm.
the hell am I still holding the stock for? Because the definition of trend is broken. It doesn't, you know, the definition isn't, why would I look at it and say, but this guy on TV liked the stock, or hey, the PE's only this or only that. You know, we try to justify these things, and end up, you know, breaking our risk management, and that's how you get into big losing positions that you've just got to rip the band-aid one day and take your big loss.
Yeah, so actually one of the chapters of the CMT He's talking about Ned Davis principles and rules that he is very, very specific on what you're describing.
Did you say
And
Ned Davis?
yes, correct.
Yeah. Okay. Yeah. Right.
Yeah. Also, you as you know, I'm here in Minneapolis and have a close contact with Ralph Camporta, and he always talk about that too. And what he, even though that he, is a old guy, old school, still believe him. Actually, so you can see in my back is a point and figure chart that he made in 1980s.
Right.
And so, and he used for you describing that letter, he used like a spreadsheet, Excel spreadsheet. So he has like a different, red lights, green lights, and then he goes to the charts and see what's going on. And it's like, very interesting how he handles his, daily routines. So another
Right.
topic that I would like to talk to you, and I know that you have many things to talk about that, but tell us more about the CMT. How important is the CMT for anyone who wants to get to the next level in technical analysis?
Yeah. So, there's a lot of people who do technical analysis online.
Too much, too many.
Too many. And the thing is, to have a professional designation doesn't mean doesn't mean because somebody has a CMT at the end of the name, doesn't mean they're one of the best technical and out there, right? It's like just because you have a law degree doesn't mean you're a good lawyer. But there
Correct.
is a body of knowledge and you understand the principles and we're all talking the same language. And we talk about a flag, we know what we're talking about. I am appalled sometimes, in particular about flags, what people will call a flag. They'll talk about a consolidation that's lasted 6 months. That's not a flag. That's, that's a whole different pattern. In the professional designation, I think gives you that level of credibility that, hey, here's somebody who has studied the science of technical analysis. Now, are they any good at implementing the art of trading combined with the technical analysis background? And that's, a whole different thing. That comes from experience. But if you're looking to further a career and use technical analysis as, one of your main thesis for your trades, there's no better designation than the chartered market technician. So I'll tell you what else is that, the people, the caliber of people that I've met, at the CMT events is just amazing. The level of respect for other people and just what you see, who you meet, as you said, Ralph is in Minneapolis and here's a guy with open arms to a young guy. So who's this guy? Why is he contacting me? But he does it with open arms, right? And there's that level of sharing and camaraderie and respect that comes along with it. So hopefully I've answered that question, or feel free to expand a little further.
By the way, this Friday is Ralph Camporta's birthday, so he's turning 70. No. He was born 1941, 42, something like that. I don't know. I never asked for age.
My dad was born in 1942, and his birthday is next week.
Oh wow, they could be good friends now. Have you been in Ralph's farm? So he has like the big shorts and
I have
he
not.
painted.
No.
Well, you need to come.
That, yeah.
You need to. Yeah, you have to check it out. And last year we had the event with Jay Woods, Kathy Stockton, David Keller, some technicians just came to just to see the farm.
So they did that great little documentary.
Oh yeah.
Great little documentary that Stock Charts did. Yeah.
Yeah, and I had the opportunity to travel to Venezuela in 2016 with Ralph, and he was like a rock star in Venezuela.
Is that right?
Yeah, and it was amazing. People want to take selfies with Ralph, talking to him. It was like, people like, oh, I feel overwhelmed, but Let me ask you this: how's your Spanish?
Más o menos, poco, not much.
Can you say something in Espanol?
Uh, let's see. Uh, I'm trying to think. I get my head out of the gutter. Um, no, not really, I guess. Uh,
Well, for next slide, I want you to practice something, and because most of the audience is Spanish speakers and native Spanish. So let me ask you
hace
this. So,
calor. Hace
color,
calor. It's hot. And bonita
tacos.
chica.
That's good. That's a good one. So, Brian, let me ask you for this because I know it's also a big topic, and I want to understand your opinion about this. Is about the algorithmic trading. What do you think about that?
I don't think there's anything wrong with it. I mean, they've been demonized. I think that, probably 5 years ago when they were really, when it was that race to the finish line, the last microsecond, that all these HFTs were jumping in front of each other. They were hugely disruptive to my style of trading about 5-6 years ago. But now that that race to zero kind of seems to have been met, and that they're all somewhat on the level playing field, now we've gotten away from trying to be the fastest. That game is gone now. And now it's back to, okay, let's try to create strategies to make money. And one of the great things is that, if you look at enough technical analysis, you can say, well, what do these algorithms base their decisions on? And mostly it's going to be technical analysis
Correct.
because it's timing, right? So if you have a real
Yes, correct.
understanding of supply and demand, what's driving these machines, and trying to anticipate where they get involved and that sort of thing, then you can use that to your advantage. It's just another piece of information that, hopefully we can, use to become better traders. And one of the key areas there for me is obviously the volume weighted average price, that it's not just a daily price that matters, but it's, the month to date. Here we are on September 30th. The S&P 500 closed pretty much right at the month to date volume weighted average price. And it had to travel pretty far the last 3 days to get there, to that level. So there's institutional money that says, hey, let's meet. They meet once a month and they say, next month we're going to be a net seller of stocks. So anytime it gets up towards that volume weighted average price for the month, put on the machines a little bit stronger. And so there's those opportunities to try to understand what's driving them. And it's always an understanding of what would I do. When you look at a chart, you say, what would a short term, a long term, whatever type time frame trader, what would they be doing or thinking if they were long, if they were short, if they were in cash? And try to anticipate, why does the 50-day moving average often act as a magnet for buyers? And when the stock gets, let's say, 3 standard deviations above the 50-day moving average, they'll short it and say, hey, this is a trade down to the 50-day moving average. So they're going to short it, comes down to the 50-day moving average, and they start buying back because their goal has been met. It's come back to the 50-day moving average, they can cover further gains. Well, then you also have, on the way up, the stock went from 30 to 35, and the 50-day moving average is down at 33. It pulls 3. They might have sold some on the way up. Maybe they sold 300,000 shares from 30 to 35, but they still have 5 million shares left. So they don't want to hurt the stock. They don't want to get out of it all at once and ruin the trend themselves. So as it gets down to the 50-day moving average, they might stick in a bid for 100, 150,000 shares, and that creates more demand in that area. So we have the shorts who stop adding supply and instead start adding demand by covering their short. We have the long, let's say, mutual fund who's long, they stop taking profits, and as it comes back down, they start sticking in bids to try to support the stock. And where do they do that? Well, they do it at the 50-day moving average because they don't want it to go below that, because they know a lot of people will sell if it goes below that. So they're trying to defend the position. Then you look at all the people on the sidelines who've been trained that the 50-day moving average is a level of support, and they say, okay, well, I'm going to buy there. Me, I'll say, hey, it's at the 50-day moving average. Here's why it's there. Here's why it has the potential to become support. So now I'm going to drill down on shorter term timeframes and look for actual evidence that the buyers are showing up. Of course, we don't know that it's the shorts covering and the mutual fund adding back shares, but we can make those assumptions about just general supply and demand and understand, why that pattern is developing. And then as it shows evidence that the support has actually been found, they've taken the risk of creating the support there. Once it starts moving away from that level, my job, as I view it, is to take advantage of that next leg higher. And if it turns around quickly, I'll just get out with a small loss.
So for you, price action is the most important thing when you're reading charts, I'm assuming.
It is. And it's trying also to understand what's the psychology driving it. It's not enough to just say, hey, that's a doji, or that's a 3 fallen soldiers, or whatever the candle patterns. It's not enough to say handle or an ascending triangle. What's the psychology that forms that pattern? So a cup and handle is basically an ascending triangle without another little higher low, right? An ascending triangle, you might have 3 higher lows. Cup and handle is 2 higher lows, but they're higher lows. So the buyers are getting more aggressive price-wise. They're not waiting for a pullback to 35. They're buying at 37. They're buying at 38. And it comes up to 40. It backs off to that 37. Runs up to 40. Backs off to 38. Runs up to 40. Well, the time between those tests might be 6 weeks and then 3 weeks. So they're getting more aggressive price-wise and time-wise. Energy's building. Pay attention. Here's what's going on. The buyers are getting more aggressive price-wise because they're not waiting for it to pull back so deep. They're gaining control quicker, and they're also gaining control more rapidly. So it seems like the buyers have this insatiable appetite. What are the shorts doing in here? They got to feel nervous during this type of setup. And if it breaks beyond that 40 level, those shorts, unless they're complete morons and not looking at what's happening here, they're going to say, I better get the hell out of the way. So they create demand on the breakout, and it becomes a self-fulfilling nature. It's not, a self-fulfilling tendency. There's, if you understand the participants and the way they're acting and the way they're trained to act, why do we look at a 50-day moving average? Because we've been told to, right? I mean, what's the magic of 50 days? There's no magic there. If
psychological levels too, as
right. So I talk about this a lot. Is that why wouldn't we look at a 63-day moving average? Because there's 250 trading days in a year. Divide that by 4, or 252 trading days in a year. Divide that by 4 is 63. Well, why would we cut that in 4? When do companies report earnings? 4 quarters in a year. They report every 3 months. So every 63 days, they report earnings. So if we're going to have a random number, let's at least, have some kind of sense to it. But instead, what's more important to me is, and I'm going to swing this back over to the volume weighted average price, is what's the volume weighted average price since the earnings report? The earnings report might have been 2 days ago, 12 days ago, 23 days ago, or 62 days, and they were due to report earnings tomorrow. So what's the psychology since that last event that was this big fundamental driver? Because there are a lot of people, and that's another thing that we have to understand. There are fundamental forces at work, obviously, in the market. So if we can understand a little bit of their psychology, what drives them to buy, what times drive them to buy, what's the psychology since that event, the event being the report. If we can measure price against the average since then, we can glean some insight into, you know, how the stock's behaving since that
on
event.
earnings quarters report. Yes. Well,
Yeah.
this is
Or
very
from
interesting.
just from a FDA report, any type of news, any catalyst. So here we have in, what is it, 37 days or something from the election, the market's going to go like this.
Oh, yeah.
For 48 hours. And how do we make sense of it? Are we going to try to dive in and, make all of our money at once and be stupid and probably lose it? Or anchor a volume weighted average price and say, let the market balance out. And when we see that balance start to form, now we can put our money on the side of who's in control and truly trade with the emerging trend out of that event. It might not reveal itself for a day, 3 days, but once it does, it'll start to act as support or resistance. And that's where I want to align myself. I don't want to look at, well, if Biden wins, this is going to happen to the market. Or if Trump, wins, here's what's going to happen. Nobody knows. That's just nonsense. That's just stuff they talk about to try to sound smart. What we want to do is say, here's what the market is deciding in real time with real money. This isn't some game where we just go on TV and talk about this stuff. We're putting our hard-earned money at risk and trying to control that risk and be on the correct side. So how do we get on the correct side? Do it because I like this candidate or I don't like that candidate. That's foolish to bet your money on that. If go to predict it market and do it there, but don't do it in the stock market.
So don't predict, be prepared. It's one of the main phrases from the CMT books.
Which was what? I'm sorry, I missed that. It kind of cut out for me for a second.
Yeah, so the one of the CMT, one of the phrases said, do not predict, be prepared.
Right. Yeah. Exactly.
Okay, Brian, so time is... No, I'm going to say that time is running out.
Like to say, okay, good.
Oh,
Go
yeah.
ahead.
No.
I like to say, anticipate all potential scenarios, wait for price confirmation, and then manage risk. So don't predict.
That's the holy grail, or you just said.
Yeah.
People, take notes. That's very important. So, as you know, I love this section because I try to read at least one book or 2 books per month. I'm also busy with my current job, but you had to pick 3 books besides yours. I'm gonna put 4 because they're gonna include your books.
Okay.
Just 3 other 3 books that you recommend to anyone on this audience.
All right. You asked me that in advance, so I looked at my bookshelf, and I'm going to say 3.
Be prepared. I like it.
I'm going to go with Stan Weinstein. That was a huge influence on my career and understanding money flow. I'm going to go with one that a lot of people haven't heard of, how charts can help you in the stock market. This book was written in 1963, I think.
Wow.
I picked it up at a used bookstore, 1962. I picked it up at a used bookstore, and...
Can you repeat again the name? Show us the book again.
Yeah. How charts can help you make money in the stock market.
Okay.
I picked this up about 20 years ago in a used bookstore, and they talk about patterns, okay? They talk about the... triangles, trend lines, but it's the first book I read that goes into the psychology of the charts. And it's since then probably the best one that I've seen for that purpose. And that's by William Giler, Jiler. And then I would say anything by our friend Brett Steenbarger. So here's one of those, and this is The Daily Trading Coach. So that's psychology. And then just in the same type of area is the Zurich axioms, kind of psychology and rules. So there, I gave you 4.
Wow. Oh, interesting. I'm also taking my notes here, and after all these, the live is done, I'll probably will get into. Can people find those on Amazon.com
They
or any
should be able
other?
to, yeah.
Okay,
Yeah.
okay, 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 okay.
There's another one
Well,
too. I'm just Googling. Oh, you know what,
no,
Ian?
no, go ahead,
I
go
have
ahead.
it on Kindle. I have it on Kindle. This is really, it's called The Perfect Stock. And this is about the move in Taser, which is now Axion, AAXN. That book goes through basically kind of like the old school pools and manipulation of a stock. And it kind of calls out different plays. And this is in, you know, within the last 15, the move in Taser. And it really, again, so the common thread throughout the books I recommended is that they talk about the psychology of how the stock moves and understanding the behavior of the participants and their motivations and how they
Mm,
behave. And the perfect stock is really a good one because it's a recent stock and they talk about the 50-day moving average and they talk about, you know, different buyers and their reasons for getting involved and that should be probably pretty much top of the list, the perfect stock.
now somebody put it on the comments right here. You can see here. All right.
And
Well, well, I do
I'm looking
appreciate
for the
it.
name of the author. Koteshwar.
Okay,
Koteshwar.
taking my notes. Look at my notebook, CMT. So
Oh yeah, I've got
all
one
my
just like it.
lives, all my lives are here on these notes with all the
All the
technicians.
secrets.
And someday I will write my own book about all these experiences.
I look forward to reading it.
It's gonna be in Spanish and English. So, uh,
Okay, good.
so well, Brian, thank you again for your time. I do appreciate it, and I know I'm gonna be uh, downloading this video on YouTube too. Um, and I
Great.
hope to see you soon in the future, and maybe see what happened in a couple weeks, or not 4 weeks from now. I think when is the election day? The November, the first week, I believe.
I think it's 30
So
something days. So it's like well, 6 weeks, maybe 5 weeks. Yeah.
yeah, so
November
I'm
3rd.
expecting. Let's see what happened, but crown finger that nothing goes wrong, and I hope that everyone can, understand and accept the results, whatever result is gonna be. And the last
Yeah.
comment from you, something in Espanol you want to say to my friends here?
Oh, I wish I could say only price pays. Dinero una payo. I don't know.
Hey,
I'm sorry.
actually, I just came back from Colorado. I was there in August. I went to Black
Oh,
Hawk,
okay.
Neverlands, the Rocky Mountains. I
Nice.
had, my wife's two boys. I think you had two boys too, right?
Yes.
So yeah,
Two
it
boys.
was
Yeah.
amazing. Next time I call you when I get there.
Yeah, definitely. Please do.
But
How would
thank
I
you for
say
your
only
time.
price pays in Spanish? Teach me how to
Solo
say only price pays.
el precio paga,
Solo precio para
paga.
paga. Solo
Ajá,
precio
solo el
paga.
precio paga.
All right.
You had to put that on your tweet, one of your tweets
I will.
in español.
I'll look it up and then I'll do it right.
So,
I'll get the
and
spelling right.
also, I hope, because that's one of my dreams too. Not right now, but in the future, I will host a symposium in Latin America, and I hope to count on you on that one, because I'm expecting to bring John Bollinger, all the big ones, including you, man.
Okay. Well, I look forward to it. It's been a pleasure talking to you. I like what you're doing here.
Thank you, Ray.
Okay.